The U.S. is feeling the economic impact of the war. The price of oil topped $130 a barrel overnight as calls for a ban on oil imports from Russia grow. And the price of gas is averaging $5.34 a gallon in California, up 52 cents in just the past week. Let's bring in Yahoo Finance correspondent Alexis Christoforous for more. Alexis, what exactly is driving the price of gas right now? Is this all due to the war?
You know, most of it is due to the war. It's not the only factor, though, Diane. And certainly over the weekend when the U.S. said that it was working with its European allies to possibly ban Russian oil on the market, that's when we really saw that spike in oil. Crude oil briefly punching through $130 a barrel. The national average now for a gallon of regular, over $4. We haven't seen that since 2008. Now, some other factors at play here besides the war and the fact that we might not have Russian oil is the fact that we're coming out of this pandemic. So travel is in demand right now. More people will be taking to the roads as the weather warms up, and more people will be flying. And it's not just at the gas pump that you're going to be paying more. The airlines are expected to raise their ticket prices because jet fuel is the second biggest cost for the airlines behind labor. So, you know, people are just, seems to be getting it from all sides right now with inflation at a 40-year high. I do want to note, though, that we here in America don't get a lot of oil from Russia. Europe does. They get about 40% of their oil and natural gas from Russia. We get a much larger percentage. We get most of our oil from Canada, Mexico, and Saudi Arabia. The issue here would be if we were to ban Russian oil, we would be doing it in collaboration with our NATO allies, which means a lot of countries would be going after a tight supply of oil on the market, and that is what would be pushing up prices. So if we're looking at a protracted war here, you know, drivers in this country could be easily looking at $5 a gallon in many cities in a matter of days, Diane.
And Alexis, due to sanctions, the value of Russia's currency has plummeted against the dollar. So how's that affecting Putin and the oligarchs that run Russia's industries?
Yeah, we've seen that ruble crash over the past few days, down about 30–40% against the U.S. dollar and the Japanese yen. And that really just hurts the purchasing power of Putin and those oligarchs. And it makes all of their investments held in ruble worth a lot less. The one thing is, though, that if they were preparing for these sanctions, which you have to think they were, they've already hidden a lot of their money in cryptocurrencies and things like Bitcoin, sort of on the dark web. It's very difficult to follow that money, which is why a lot of lawmakers here are asking for sanctions regarding Russia as it pertains to cryptocurrencies, so they couldn't use that as a place to sort of hide out.
Now, Russia's stock market has been closed since the invasion started. Why is that, and how could that impact the markets here?
Well, they needed to shut down the Russian stock market right away so that they could hold on to any sort of liquidity that investors want in that market. So instead of just this huge panic and everything sort of crashing to the ground as the economy there continues to melt down, they decided to shut down the Russian stock market. It was closed all last week, not expected to open again until at least Thursday. You know, we're going to see if investors, once that market does reopen, have the confidence to even get back in. You know, we've seen a bunch of American corporations pull out of Russia, everything from Apple and Microsoft to Nike, MasterCard and Visa. Now, Russians can't even deal with regular, simple, basic transactions for their money. They can't use credit cards. They've been cut off. So we'll have to see in the days ahead if that stock market opens, and when it does, how investors react.
And now Ukraine and Russia are part of this region known as the breadbasket of the world. They produce a third of the world's wheat and barley. So what happens to the food supply if this war goes on?
The news there is not good either. Russia and Ukraine are responsible for much of the world's wheat, soybeans, and corn. We have seen what are called futures for these on the commodities market. Those prices have really soared because there's concern we're not going to be able to get those commodities to where they need to be. And remember, those things go into the making of lots of different foods. So that means higher prices for things like bread, for corn, for even cereals, things that contain things like corn and soybeans. So it looks as though the world is really looking at inflationary pressures coming from those higher energy prices, but also coming from these higher food prices.
All right, Alexis Christoforous, always great to have you. Alexis, thank you.
Thanks.
Hi, everyone. George Stephanopoulos here. Thanks for checking out the ABC News YouTube channel. If you'd like to get more videos, show highlights, and watch live event coverage, click on the right over here to subscribe to our channel. And don't forget to download the ABC News app for breaking news alerts. Thanks for watching.